A very common misconception that people have is that if they are living abroad or they are working as a digital nomad, they're traveling long term, they don't have to worry about Uncle Sam or the IRS because they're outside the US. Nothing could be further from the truth. Today, we're going to talk about what you, a U.S. citizen or a U.S. permanent resident, what you need to know about taxes while you are spending extended time outside the United States. If you're new here, first of all, welcome. I'm Adelia Borchade, also known as Picky Girl Travels the World. I saved and invested my teeny tiny teacher salary and achieved financial independence. So now I live life on my terms. I travel when I want. I work if and when I want. I help other Black women do the same thing, create the life they want, and help them figure out how to finance it. If that sounds like your jam and the kind of thing you're into, you should subscribe to the channel. I post new videos every week all about living abroad, finances, and solo travel. The idea that you don't have to think about Uncle Sam anymore once you leave the United States is very far from the truth. Do you, as an American citizen or a green card holder, have to pay taxes if you live outside the United States? Well, the answer is maybe. But here's the thing. The United States is one of only 2 countries in the world that taxes its citizens on global income. That means as long as you are a U.S. passport holder or the holder of a U.S. green card, it doesn't matter where you live. Uncle Sam wants his share of what you make. Now, are you actually going to have to pay taxes on the income? Because Uncle Sam wants to tax it, but will you have to pay taxes? Probably not. It depends. You are required to file taxes if you've had more than $10,000 of income. So even if you were in the US, if you make less than $10,000, you don't really have to file taxes. You can, but you don't have to. If that same rule applies to you, even if you live outside the United States. So US citizens must file taxes. Whether or not you're actually going to have to pay something depends. And so we're going to talk about that. I also need to preface that this video is not intended to be professional tax advice. Consider this educational entertainment. I will link in the description to where you can find detailed information about this on the IRS website. But again, I am not a tax professional and this is not considered tax advice. As I said, you do have to file taxes when you live outside the United States, but you probably won't owe any money for federal taxes because of the FEIE, the Foreign Earned Income Exemption. Uncle Sam will let you exempt $107,600, I think it is, for 2020. For 2021, I believe it is going up to $108,700. So your income, your foreign earned income up to about $107,000, you can exempt that from your federal tax return and therefore not have to pay income taxes on it. But there is a catch. First, you have to have foreign earned income. That is, and I'll read it for you, income you receive for services you perform in a foreign country in a period during which your tax home is in a foreign country. And you meet one of 2 requirements, either the Bonafide resident requirement or the physical presence. So what does that mean? If you're making your money and you are outside of the United States and the place you are is considered to be your tax home, Does that include digital nomads who move from one place every month, every 3 months? I don't know that you can consider a country your tax home. If you're there, first of all, if you're there on a tourist visa, that country is not your tax home. So in previous videos, the one I did on visas and on general how to move abroad, I talk about, that some digital nomads prefer to skip the paperwork and the hassle of applying for residency, and they basically just string together a series of tourist visas. So if you're in a country on a tourist visa, that country can't possibly be your tax home. Therefore, the money you earn while you're there is not considered to be foreign earned income. Or at least that's the way I see it, okay? For a country to be considered your tax home, you probably have to have residency there. And so that means you've either applied for like a digital nomad or remote work visa, or a more traditional residency, short-term or long-term residency visa. Now, let's talk about because you hear people talk about the foreign earned income exemption. You hear people talk about that and they're like, oh, just be outside the United States. Well, there are specific rules to that. You can, first of all, it's for a 12-month period. It does not have to match up with January to December. But for a continuous 12-month period, you need to be outside of the United States for at least 330 days. Those 330 days can be spent in whatever countries you want, but you can only be in the United States for 35 days if you want to qualify for the foreign earned income exemption, or you can do it by being a bona fide resident of another country. Again, bona fide resident means you have a residency visa somewhere else. You have established your life somewhere else. Now, with the bona fide residency test, if you meet those requirements, like you can show, hey, I have residency in this country, I have a place to live, like my life is there, you can come and go to the United States and it's not going to impact your qualifying for the foreign earned income exemption. But if you don't meet the bona fide residency test, your best bet is physical presence, by having your physical presence be outside the US. Now, who determines whether or not you meet either one of these requirements? The IRS, and it's all subject to interpretation. If you were to get audited, you do need to be able to back up whichever claim you're making. That's if you get audited. I'm not saying you will. I'm just saying if. There are also rules about what counts as income to meet the foreign earned income exemption. And so I'm going to put up a graphic and let you see. This comes directly from the IRS website. There's a link to this page in the description. On the IRS site, they go into more detail, but you can see that they tell you what counts as earned income, unearned income, and variable income. You and your tax professional, whoever that is, it might be you, can make the determination, does the money you make qualify? But what about people who are self-employed? Okay, this I find very interesting, and this again comes from the IRS website. A qualifying individual may claim the foreign earned income exclusion of foreign earned self-employment income. So if you are self-employed, yes, you can take the FEIE, but that does not eliminate your need to pay self-employment taxes. Those are two different things. I'm going to read again directly from the IRS website. The excluded amount will reduce your regular income tax, but will not reduce your self-employment tax. Okay, so two different things. But if you are self-employed, you may be eligible to deduct the cost of your foreign housing. So we're not really going to get into this video because we're going to keep it simple for what impacts most people. Again, go to the IRS website You can find what all of their rules are there. So we've established that yes, you need to file taxes, and odds are that you probably aren't going to have to pay any federal income tax unless you made gobs of money abroad. But when do you need to file, and are there any other requirements? Okay, so the standard tax deadline is April 15th. However, if you are living abroad, you get an automatic extension to June 15th. That's the expat filing deadline. June 15th is also the filing deadline for FBAR. FBAR is something you do need to know if you're going to be living outside the United States. It stands for Foreign Bank and Financial Accounts Report. Basically, Uncle Sam wants to make sure that you are not hiding money from him in offshore bank accounts. So, any American or green card holder, any U.S. American or a U.S. green card holder who has foreign accounts that have an aggregate total of more than $10,000 at some point during the year needs to file an FBAR. It is a separate process from filing your taxes. It has, its own deadline, its own thing. Now, you don't have to pay anything for FBAR. This is just Uncle Sam's way of keeping tabs on you. Notice I said you have an aggregate total. A lot of people misinterpret and they think, oh, as long as I don't have more than $10,000 in one foreign account. No, it's across your foreign accounts. If you're an expat, you can file your taxes April 15th. But remember I said, if you want to get the FEIE, the Foreign Earned Income Exemption, you're looking at a 12-month period. Well, what if your 12-month period doesn't line up with the tax year? That happened to me the first year I moved abroad. I left the United States in July, okay? So I wanted to make sure that I got I was able to exempt my income. So I filed an extension and got until October instead of the regular June date to file my taxes. If you file for an extension, that automatically extends your FBAR due date if you need to file one. Oh, something else that you might hear people talk about is FATCA, which stands for the Foreign Account Tax Compliance Act. Nothing you need to do, but you may find that when you try and open a foreign bank account, you may find that a lot of institutions don't want to deal with Americans, or they may ask for your social security number. That's because the IRS wants their money. And so they have basically told these other countries, look, if you have Americans banking there, you need to supply us with this information about their account, because Uncle Sam's keeping a tab on you. There is nothing you have to do about it, but just know that it often makes financial institutions in other countries very hesitant to deal with Americans because they don't want the burden of the extra paperwork. How do you file those taxes? Do you need to hire an accountant or a tax preparer or somebody like that? I use Tax Act. I used them before I moved abroad, and I have continued to use them with no issues. They are relatively affordable. I think it might cost me somewhere between $20 to $30 to do my taxes. I will include a link in the description so that you can save 20% off if you want to use Tax Act. Somebody else, if you need a professional, let's say you're not comfortable doing them yourself, you need a professional. Americans Abroad has a directory of tax professionals. You just input the country you're in, and they will list people who do taxes and who are familiar with American tax law and all of that. So Americans Abroad, Like I said, I use Tax Act. It doesn't really matter as long as they get filed. Okay, so what if you've been out of the United States and you've just stopped filing? What can you do? The IRS has a voluntary compliance program. They have streamlined the process. Basically, you would file for the last 3 years. Do the last 6 years of FBARs, and you have to sign off saying that you didn't willfully try and avoid taxes. And then there are no penalties or late fees, I assume, as long as you don't owe them money. If you need to file. Now, remember I said the foreign earned income exemption applies to federal taxes. I lived in the state of Texas, which does not have a state income tax. So that's all I have to worry about. But if you live in one of the 40 some states, 39 states, because I think there's 11 that don't have income taxes, your state may still charge you income tax on your foreign earned income. Okay, so that's something you have to apply. Do not assume that they will give you the same exemption that the IRS does. Some states do, but a lot of states don't. The other part of this is a lot of people wonder, well, do I have to pay taxes in the country I'm in living abroad, or I'm working as a digital nomad in this country? Do I have to pay taxes in that country? That depends. Every country has their own rules. To avoid double taxation, the U.S. has tax treaties with a bunch of countries. And basically with the tax treaty, if you pay taxes in the other country, the U.S. will let you use that as a credit against what taxes you might have to pay them. Okay, so the idea is so that you're not paying twice the income tax. I have a link in the description to the list that the IRS has of all of the U.S. tax treaties. The other thing that is going to determine whether or not you have to pay taxes in your new country is whether you are a tax resident there. In the United States, we don't really have this concept because the United States wants to tax you wherever you are. But pretty much most other countries, if you are not physically living there and receiving the services that you would be getting from your taxes, you can either file as a non-tax resident, or you can say, I'm a tax resident in this other country, therefore I'm not paying these taxes at home. The U.S. doesn't allow us that. But let's say that you are in a place like Portugal, and you are there, Portugal, Colombia, probably Spain, you're there for more than 180 days, more than half the year. A lot of countries have it at 183 days. So let's say that you're there that much time during the year, you automatically become a tax resident and therefore should be paying taxes on your income to that country. You need to do your research about the country that you will be spending time is. What is their policy? How much time must you spend there to become a tax resident? What a lot of digital nomads do is, that's part of why they are nomadic. They never stay in one country long enough to become a tax resident. That's fine, but you still, if you're an American, you still have your obligation to the U.S. You never get rid of that. I don't know if this is going to continue to be the case because those laws were written when it wasn't possible to be a digital nomad. Now, what we've seen from the pandemic, there's going to be a lot more people working remotely, embracing the digital nomad lifestyle. I would not be surprised if countries start seeing that as a possible way to earn some tax revenue and start taxing that. But as of right now, If you're not in a country long enough to be a tax resident, in theory, you should not have to pay taxes there. There are some countries where if you have residency, like I'll talk about Mexico, for example. I have residency in Mexico. However, as long as the source of my income is not in Mexico, even as a permanent resident, I don't have to pay Mexican taxes, Mexican income taxes. But whether I'm a resident or not, let's say I have a vacation property that I rent out. I also rent it as an Airbnb. It doesn't matter if I'm a resident or if I'm just a tourist. If I am earning income in Mexico, like on my Airbnb, I have to pay taxes on that. Okay. If I am working in Mexico, I used to have a work visa for about a hot 5 seconds. I taught business English and I had to pay Mexican taxes on the money I was being paid because that work was happening in Mexico. But as a resident right now, if what I am doing is not gleaning my income from Mexico, I don't have to pay taxes. But of course, I still have to address whatever taxes Uncle Sam works. So that may sound super confusing. You really need to find out what are the rules in the countries you want. I think I've mentioned it to y'all that one of the reasons I will probably not go for Mexican citizenship is because if I were to become a Mexican citizen, then they want to be able to tax money I make outside of Mexico. Okay. And I'm trying to keep things as simple as possible, so I won't go that route. It's one of the reasons I opted not to pursue residency in Colombia because it was going to make my tax situation more complicated. There are some countries that are trying to entice expats to come there. And I know Portugal gives you like 10 years of either reduced income taxes or they won't tax a certain portion of your income. I can't remember exactly, but they do that for 10 years, hoping to entice expats to come and spend their money there and spend their time and help build up the economy. But really, you're going to have to do research specific to the country you choose, and don't make assumptions because every country is different. I cannot say that enough. That's the gist. That's the very short, uncomplicated, or at least as uncomplicated as I could make it, answer to the most frequently asked question, which is, do I need to pay US taxes and I live outside the United States? If there is, again, I am not qualified to give anybody advice, but if you like the way I explain things and there's something else related to taxes or finances that you have a question about, go ahead and leave that in the comments. If you enjoyed this video, please hit the like button. If you know someone who would find this information useful, please share the video with them. And I'll see y'all next time.